Welcome to Retirement with Rick. I'm Rick Rodriguez, your host and SVP and Retirement Mortgage Specialist at VIP Mortgage. Today, I'm pleased to have Dena Cole on the show. Dena Cole is from Gleish Insurance Group. Her group offers a wide variety of insurance services, including home, auto, business, and life insurance, and prides itself on providing tailored coverage options by working with top insurance carriers. Dena, welcome to the show.
Thank you. Happy to be here.
Yeah, happy
Thank you for inviting me.
Yeah, of course. First thing that comes to mind is what inspired you to get into the insurance industry? Was this something you dreamed about as a young girl?
No. It was actually the last thing on my mind.
Yeah.
I did not get into insurance until I was 60 years old.
Oh, okay.
And now I've been in insurance for 10 years.
Okay.
It just seemed the obvious next career in my long working career. And I was good at sales and liked working with people and helping people.
Yeah.
And insurance just seemed the next move to make.
Yeah. So obviously working with people.
Everybody needs insurance.
Everyone does need insurance.
So,
yeah.
I want to make sure that they're covered.
Absolutely. And obviously working with people, as you said, that's a big thing. How do you work with clients in helping them get like the best insurance, the best pricing? Like what's kind of your process and how you start with working with clients?
Well, I start with intake. So I need your name.
Yeah.
And your first and last name.
Sure.
Spelled correctly.
Yeah, that helps.
Yeah. And all the intakes should be full disclosure so that you have the right information and get the best coverage for the lowest premium that's available. And I want to know what their needs are, but I first need some personal information. I would always need date of birth, their address.
Yeah.
Whether it's home or auto, or even for life insurance, you have to just give all that information on who you are, and then I go into the coverage needs. And if it depends if it's home or auto, we go from there. And I educate people as I give them the coverage so that they have their own choices and feel comfortable with it. Because the bottom line, insurance is peace of mind.
Yeah, right.
And you want to make sure that in any problem that might occur, that you have the coverage you need in order to be able to repair a car or rebuild a home. And you also want to have liability coverage.
Yeah.
Because you don't want to be sued
for
that's anything that.
Yes.
Yeah, and I'm here to help.
Yeah. What advice would you give for those who are looking to update their coverage? You know, what advice do you give to those? Like, is there, things, common misconceptions or things that they should have prepared together before they typically call you or come to see you to update their coverage? Or is it simpler than that?
Well, oftentimes people already have coverage, and they want to change their coverage because maybe they're not happy with their rates, their service, whatever the situation might be in their case. And so I am happy to do that comparison with them. And what I do is an insurance review.
Okay.
So I make sure of, what kind of deductibles they want. So the higher the deductible, the lower the premium rates.
Sure.
So you have to consider what your needs are financially and for anything that needs covering, that you got the protection that you would need, how much or how little. And with homeowners insurance, you always get liability, you always get dwelling coverage, personal property coverage, other structures from most homeowners insurance companies. So you always want to make sure of what coverage you are getting when they call it a homeowner's policy.
You're right.
Because there are different kinds of homeowners coverages. But most of the major companies are going to give you the full coverage that you need on all of the necessary things that are required in order to maintain the replacement of the dwelling. God
Right.
forbid it burns down to
Sure.
the ground.
Last thing we want. And I assume, so number one, probably a good idea to do an annual review. And secondly, are there triggers, events that could occur in people's lives that for themselves could be something they can keep in mind to say, hey, you know what, I probably should look into doing an annual review of my insurance. Or as people age, you were just talking about how insurance deductibles obviously can be different for different situations. I assume too, as people age, that could be another trigger too as to why they might want to look at doing an annual review on their insurance
Well,
coverage.
homeowners insurance should be reviewed annually.
Okay.
But it can be reviewed in the middle of the policy as well. I mean, there might be coverages that you need to add or subtract for different reasons. Everybody has different situations and in their lives and the events that might occur. But auto insurance, some companies will give it to you for a year term, but others, and most often, at least here in Nevada, do 6-month terms. So you might want to review your auto every 6 months.
Okay.
And see if you're getting the coverage that you need and the discounts that are available, and if they've changed, if there's more,
Yeah.
if there's other ways that you can modify what you do have in order to make sure that you have the coverage you need and the lowest, most affordable premiums that are available.
Sure. What here in Las Vegas, are you seeing any challenges in the insurance industry for homeowners? And if there are, how are you addressing that?
Well, there are challenges all over the country.
Yeah.
And as the natural disasters happen all over the country,
Yeah.
then each state starts to change the requirements for insurance and whether or not they will even be able to cover the risk.
Yeah.
Now, in Nevada, we've been lucky where we don't have had as much natural disasters as
Yeah,
we've
thankfully.
seen throughout the country, especially lately in Florida, in the Carolinas and then
Yeah.
the fires
Wildfire in California, sure.
wildfires in California, and so forth and so on. So
Yeah.
we still have companies here in Nevada that will cover homeowners insurance for an affordable price, but they go up too as the other states because the risk for the entire company that
Right.
might be countrywide has risks that they have to cover, and so they raise their premiums to cover the risks.
Right.
But we haven't been, in a position so much whereas for homeowners insurance that we don't cover homes at all and have to broker it out like in other states.
Yeah.
In other states, for instance, natural disasters in Florida, with hurricanes, for one example, people have to get protection for their homes, for reinforcement, before some insurance companies will even cover them. And a lot of insurance companies are not covering them anymore. They might drop them after the natural disasters. And then they'll have to get another company that does take on that kind of risk. But here in Nevada, that hasn't been so much the case for natural disasters. It might be for some other reasons that you might be dropped. The bottom line is if you keep your home, the dwelling, that's the coverage for replacement costs, up to standard, up to code, and safe, then your insurance can be affordable because they do inspections on homes after, if you get insurance, let's say insurance is issued on your particular address to you, then an inspector will come out to inspect the property to
Right.
make sure that it is in good shape.
Right. Initially.
And, yes, and they do an inspection outside the home. You don't have to be home. They're not going to
sure.
come in your home. I mean, you can have your laundry all over the place, and
good.
nobody's going to worry about it. But they do want to make sure that the dwelling is taken care of. And if they see anything that could be a hazard,
Yep.
then they will cite it and ask you to repair it, or otherwise give you about a month to otherwise find other insurance. And
Do they do those inspections also after the initial policy is put in place? Do they do that like periodically, unannounced, or?
Some companies just let it go for years and years and years and years. And then after a certain amount of years, they might change their policy, and some have changed their policy, and they inspect them maybe yearly at renewal.
Okay.
So things are changing in the industry.
Yeah.
Because insurance companies are taking a risk insuring you.
Yeah.
So they want to make sure that everything is in proper condition in order to be able to provide you with that insurance protection. So it's sort of a teamwork.
Yeah.
You have to keep up your property, and they'll keep up with you. God forbid anything happens, they're there to help you replace. Homeowners insurance is replacement from the ground up. Exactly how you have it. That's the way. You can get what's called actual cash replacement, but that's for depreciation. So it'll cost you less in premium, but your coverage is more solid and better if you can get the replacement coverage that you need, because you want to replace your home just as you bought it.
Right.
So that's probably the best way to go. And then the same. There's auto insurance too. You might want to get insurance when you buy a new car for replacement value too.
Yeah.
Because as soon as you drive that car off the lot, there's depreciation.
Sure.
But you want that car. If God forbid somebody sideswipes you while you made a turn onto the street from the driveway of the dealership, you sure want that. You don't want the depreciated car. You want your car.
That's right.
You can either get gap insurance with them or just add that to your insurance policy.
Right. I'm interested, and you touched on it with these natural disasters that are happening, specifically in Florida, and we're just on the heels of two major hurricanes that just hit. What advice can you give to homeowners in those regions about how they can best protect themselves? Obviously, you're living in an area that may be prone to hurricanes. Is there anything as a homeowner that you think they should have in mind, or that you can advise them on to ensure that they have the best possible outcome if disaster strikes?
Well, insurance companies are now requiring, in order to issue you insurance in certain areas, that when you do rebuild your house, you have in place reinforcement protection.
Mm-hmm.
So,
would that be like reinforced windows or
exactly?
Yeah,
that
hurricane windows, like I've heard,
and even concrete and stucco and just the foundation reinforcement.
Yeah.
There's many. I'm sure there's many companies out. I don't live back in Florida, but I'm sure that they're easily found.
Yeah, sure.
Because now at this point, they're very necessary, and also. There's been hurricanes 40, 50 years ago. So, some of these things have already been in place.
Yeah.
That it's necessary for you to get reinforcement protection if you're in those disaster areas.
Yeah.
See, even though the hurricanes might hit, or the tornado somewhere, you might not be in the worst of the usual areas that they hit, as even though it hit, it can hit all of Florida, but it could miss certain areas, and just like flood.
Yeah.
Are you in a flood zone?
Right.
These kinds of things. So no matter what, you should get, your reinforcement protection for the dwelling, and they might require for just homeowners insurance that you also get things like flood insurance that is not offered on your basic homeowner insurance.
Right.
And then they'll insure you. when they make sure that your home is, that you're doing as your part to protect your home, and then they will protect it from the natural disasters if they should occur. Like people in California get earthquake insurance.
Sure.
Yeah. So there's other kinds of insurance that might be required that's not covered by homeowners insurance alone. And the things that's covered by homeowners insurance is the dwelling, other structures, whether they're attached or detached, your personal property, everything inside your home, and liability. If anybody gets hurt inside your home, you want to have the liability protection, and those things are covered, but you might not have flood coverage, and you're in a flood zone, so you might want to get flood insurance to go along with it, or you might be in an earthquake zone. You might want to get earthquake insurance to go along with your homeowner's insurance. And in some places, certain other insurances are required before they'll even do homeowners insurance.
Right.
And the protections that have to be in place.
Is there anything that a homeowner could do in that situation? Obviously, we've been hearing, unfortunately, some stories where people, again, with the hurricanes that have just recently occurred, that they're having some challenges with trying to work with their insurance companies to maybe determine how exactly the disaster happened. Was it wind? Was it the flood? Is there anything that a homeowner can do before a disaster happens? Anything they can do to try to or when the disaster happens, anything that you could advise that they can do to try to help best document for themselves that when they potentially need to work with their insurance company to maybe furnish, additional documentation that could help that process of determining what actually caused the damage? Is anything a homeowner can do in that regards?
No,
No,
not that I know of. I mean, I could say that if you have like old trees or even new trees that are not stable, you want to make sure that they're stable, and maybe that the branches are cut away from the home, that the trunk is not going to fall into your roof. So sometimes the landscaping can help, as well as the other protective things that you get, such as reinforcement for your windows and the dwelling itself.
Yeah. Okay.
Yeah.
Okay. What
And the difference between insurance and warranties, that's a very important issue, I think, to understand. So let's say, if it wasn't a natural disaster and something happened in your home, like the washer went out and it flooded the room.
Yep.
The washer is a warranty. That is not covered by insurance, even though it's your property, because it happened by wear and tear. Mm-hmm. So the difference between, so you know what your coverage is and isn't. Insurance covers accidents, and warranties cover wear and tear.
Okay.
And that's the most important thing. Just like your car, if you are in an accident, then you call your insurance company. If your transmission goes out, you call a warranty company.
Gotcha.
And because insurance is not going to pay for anything that has to do with a warranty, just like in your car. And you wouldn't even think to call your insurance company to have an oil change or anything else that you need to do on your brakes or something that needs repair, that did not happen in an accident, that happened from wear and tear.
That's a
same
good
thing
point.
with the homes. Same thing with your home. So that's why you might want to get warranties on home
warranty. In other words,
home warranty
Yeah.
insurance.
Yep. Sure.
So that's the difference. So you might want to carry both.
Gotcha. That's a great point. What are you aware of any common misconceptions that senior homeowners have about homeowners insurances? Have you come across anything where in working with them, they may have some other idea of what insurance looks like, specifically homeowners insurance, or what coverage looks like that you've been able to dispel?
I don't think there's any difference. I think that they're more seasoned. I mean, they have more knowledge because they've been insuring a home for longer. I think newer buyers, younger people might say, what do I need?
Yeah.
But older people might say, do I have the right coverage? And that's where the review comes in. Mm-hmm. But I don't think there's any difference between that market, older or younger, in terms of insurance. They all need to know what is going on in the industry because it could change, even though they've had homeowners insurance for 20 years. Well, but what has changed? So, they might have questions about that and should be well informed. And your agent, you should feel comfortable enough to be able to call your agent and have them review these things with you and update you on things and update your policies.
Yeah.
So people do often choose a personal agent rather than an 800 number for insurance.
Sure. Especially senior homeowners. They probably want to have
they
someone they
might
can
want
go
something.
to.
Usually they do. Usually the older people do. Younger people, now everything's on the internet.
Sure.
They're like, whatever, they just punch it in and there you go. But some of them, they want to know, they want to understand. Sure. And but there's your choice. Choose your, the method of how you want coverage, but make sure you get the right coverage. Make sure that you're protected.
Yeah. Does it change at all when, and it's probably mostly senior homeowners than younger homeowners, when they're getting close to paying off their mortgage or their mortgage has been paid off in full? Is there any change in homeowners insurance coverage or anything they should do differently with that?
Okay, let's say you're paying off your home and your insurance was escrowed, meaning your insurance is paid by your mortgage lender.
Right.
But actually you're paying it because they build that in to your loan.
Right.
Because if you have decided to escrow your insurance, otherwise you can choose to just pay it directly. But let's say you pay off the home and it was escrowed.
Yeah.
Well, then obviously you're going to have to pay your insurance now because you're not paying a mortgage company anything to pay it for you. So now you're paying your only insurance and taxes, but you don't have to pay your mortgage because you don't have one anymore. So that's where it can change with a payoff, but maybe you were always paying your mortgage off. So let's say you said, I don't have that mortgage company or that loan number anymore. Then we just take it off and there's no changes because you've been paying it all along yourself directly.
Sure.
So there's no changes to the premium because you took it off. Or you paid it off. There's no changes even if you refi. I mean, the only difference is if you refi your mortgage, then you may change your mind. I'm not going to escrow my payments anymore.
Right.
I'm going to pay it myself. I'm going to pay my insurance and my taxes myself, and that's in this refi. But you might choose to just say, nope, I'm going to still escrow my insurance and my taxes, and then we just need a new loan number and a new name to put on to bill them. That's all.
Sure. Mm-hmm. What about something I come across a lot is senior homeowners, a lot of them because they've already been able to accumulate large amounts of housing wealth, or they have other investments that they can utilize when they go to buy a home. Many of them pay cash for a home for different reasons. Obvious for many of them is that they don't want to have a mortgage payment in retirement. So a lot of them will just pay cash. In paying cash for homes, and I read an article, not again to focus on the Florida coast, but I read an article right after Hurricane Ian in political.com, and it discussed exactly this, that there was a lot of people that came from different parts of the country, New York, California, had large amounts of housing wealth, and they purchased homes in that section of the Florida Gulf. Then, of course, before the hurricane came, they purchased those homes for cash. And in doing so, because there's not a mortgage, number one, homeowners insurance is not required by a lender when you pay cash for a home. So in that scenario, there could either be situations where people may not even get homeowners insurance, which I couldn't imagine, but maybe they didn't get proper coverage. Or what really this article was highlighting, that because they, again, didn't have a mortgage when they bought the house and didn't have these requirements, flood insurance was optional, and many of them opted not to get flood insurance because they weren't required. They didn't see a need, I guess. And so therefore, hurricane comes in, their house is wiped out, it's gone. And the article stated that many of those retirees who had put a large portion of their wealth into real estate to have the home free and clear, many of them were not going to be able to recover that wealth back because they didn't have the adequate insurance. What advice would you give to people who are paying cash for a home? And
get insurance.
Just get it.
I mean, it's obvious. I mean, unless you can afford to insure it yourself, and you know that you'll be able to rebuild that house. So let's say you paid $500,000. Okay, let's say $500,000. But what does it take to rebuild that house? Because the market value can be anything, and it fluctuates.
Sure. Right.
But you need to know how much it would take to rebuild that house as replacement costs. That's what insurance does for you. Mm-hmm. So can you replace it? And is it going to be $500,000? Yeah. Is it going to be maybe just $400,000, or maybe $1 million? Maybe it's the cost to repair homes goes up, not down. Yeah. For materials and labor, as we've seen in this economy.
Yeah. And I know you don't do a lot of flood insurance here in Nevada, but from my understanding too, and correct me if I'm wrong, I read recently that 95% of Americans who have flood insurance is through the National Flood Insurance Agency, like a federal, correct me if I'm wrong, federal program, right?
That's correct.
And if I'm correct, that federal program only covers up to about $250,000, or I don't know if you know that amount offhand, or if I'm correct.
Okay, it works as a deductible.
Okay.
So there's a percentage of the dwelling coverage that you have to come up with yourself. Yep. So your deductible might be, say, $30,000, as opposed to homeowners insurance, which doesn't cover flood. Okay. Right. Is maybe $1,000. So you might not want to get homeowners insurance if you have the money to repair something inside the house or on the dwelling that isn't caused by, say, a flood, because maybe that repair is, $5,000. So, you're able to do that. So why get insurance with $1,000 deductible if you can afford the repair at $5,000? But with floods, who knows what you can or cannot repair, but you still might have to come up with $30,000. Who knows? Whatever the percentage is that you've chosen, but it's not going to be just a choice of $500 or $1,000. It's going to be a percentage choice, which is costly. But then, hey, if rebuilding the house costs more than $30,000, then you might want to take it out. But if you can rebuild the house by yourself, and you say to yourself, why should I pay $30,000 when I, for my deductible, and pay the insurance every year when I can do it myself? I'll just do that. But who has that kind of money? Right. I don't know. There are some people, but I would say that even those that do have that kind of money, billionaires, they have insurance. They don't want to come out of pocket for anything. Just that's just good business. Right. And you want protection. Right. And so it's better to pay the deductible than to pay for the whole cost of replacement.
Right. I wonder if people in retirement, because many of them are retired and aren't earning as much as they once did, and many of them might just be on fixed income. Have you come across, or do you think, is there an issue with people maybe bypassing certain insurance coverage, whether we're talking about flood or homeowners or any other type of insurance, or maybe just going skinny on it, so to speak, because they're working on fixed income and they only have so much income that they can utilize for insurance products. You come across this much in your practice? Is this something that you think is a topic of conversation out there?
Well, that's when we discuss coverage and what you need and what you don't need, because more liability coverage costs more.
Yeah.
Lower deductibles cost more in premium. So it's just a matter of tailoring it to your needs the best that you can to get the most affordable product that will take care of your needs and not hurt your pocketbook too much. Because if you can't pay for insurance, you're going to lose it anyway.
Right.
But people need insurance, so that should be something that they have to structure into their budget sort of as a priority, I would think, because if you don't have any place to live or you don't have a vehicle to get around in, that could cost you more.
Yeah, sure.
Ultimately, and you don't want to be homeless, certainly.
Right, absolutely. And obviously, protecting assets older in life. For anyone, protecting assets is important. But certainly for those where they're not working anymore, they don't have this working income like you do when you're in your 20s and 30s and 40s. Your assets, this is more vital for people in retirement to protect what you have there, because this is supposed to sustain you for the rest of your life. So, is there anything that comes to mind on how you help them to best navigate that to protect their assets?
Well, when it comes to homeowners, if you're a retiree, some companies give you a discount for being a retiree. So that's
good.
So make sure that if you didn't have that in place, that you do have that in place if that company offers you that discount. So the bottom line is, always look for all the discounts that are available in the product that you're purchasing.
Right.
That's where reviews come in, because you might forget, oh my God, this changed. Even like a credit card changed, and you have to, change that credit card information with the company. We don't think to do all that for every change that happens in our lives, because there's many events that come up and changes and age and different situations, work situations, and so forth. That's where review is very important. So you just think to yourself, like you said in the beginning of this podcast, review, at least once a year on your homeowners, at least maybe 6 months, depending on how long the term is on your auto. And if you feel like doing it in between because there's an event that changed, go ahead, or something that you think of. But if you don't think to change those things, and remember to change it with everybody, because there's other things that change, that other people are involved in, other things are involved in. Your address changed for different companies that you're involved in, and so or working with for different issues and things that you need, as a consumer. So you might just put it on your schedule. Hey, okay, let's do a review, and then all those questions can be addressed automatically.
Right. Do you have any stories that you can recall where you were able to offer some solutions to people in difficult situations, whatever the situation may be? Did any come to mind where you were able to help them kind of navigate and find a solution?
Well, that would probably, I'm guessing the question is sort of veering towards claims, in the sense of if an event happened that you need to put in a claim, whether it's for auto or home, whatever it might be, then that's up to the claims department. The claims department is going to ask and look and research that you have the right coverage. So that's where the coverage for the agent that you're working with, you want to make sure is in place before there's an accident and you have to put in a claim.
Right.
But once that happens, if you don't have the coverage you need, then some things will be covered on that claim and some things won't be, because the claims department is going to find out what kind of coverage you have. They're also going to determine what the problem is and if you're at fault or if it was an accident that happened to you. They're going to inspect a home, they're going to inspect the vehicle, and all the people involved in that particular accident. And then they're going to determine, okay, what coverage do you have and what don't you have? For instance, an uninsured motorist.
Yeah.
You know, you don't have uninsured motorist coverage and this guy is at fault and you get hurt. Well, then you might need, insurance for that. But not all uninsured motorists covers anything but medical if you are hurt. Your collision coverage covers the repair of your vehicle. And if the other guy's at fault and doesn't have insurance, then your insurance can cover that if you have collision coverage. But if you don't, then you'll have to repair your car yourself.
Sure.
So you just want to make sure, again, it really all boils down to coverage.
Coverage, yeah.
Yeah, make sure that you're covered.
Right. Right.
Yep.
What we've done a little work with retirement mortgages, also known as reverse mortgages. What, from your experience, what advice, if you have any, could you give senior homeowners who are maybe looking into a retirement mortgage, into their retirement plans? Is there anything that, and from not just from a homeowner yourself, but just from an insurance standpoint as well, anything that you can offer on how a reverse mortgage can fit into insurance plans and some of the things we've been talking about today, how it could potentially maybe offer solutions or be an aid to some of these challenges or topics that we've covered today?
Well, the insurance end of a mortgage can work differently, whether it's a conventional mortgage or a reverse retirement mortgage. Now, with a conventional mortgage, you have a choice. You can escrow your insurance, as I was talking about before,
Yeah.
and your taxes, or you can pay them yourself. It's a choice. Now, if you escrow it, then the insurance company, your mortgage company pays the insurance company.
Right.
If you pay it yourself, obviously, with a conventional mortgage, that's a choice. If you pay it in your escrow, then you're paying the mortgage company to pay your insurance. Now, with a reverse mortgage, you're not paying your mortgage. So you have equity in your home. You might be able to get cash out of that reverse mortgage. That might help with a lot of things that you've wanted to do in your retirement, or fixing up your home, or things that you might need. But they're not going to pay your insurance. You have to pay your insurance and your taxes because you don't have a mortgage that you're paying to them to pay to the insurance company. So that's the difference on how insurance works with a reverse mortgage. Personally, I enjoyed working with you as a reverse mortgage client, and it was the best thing that I ever did. And I know that you offer education before anybody leaps into the choice and thinks, "Oh my gosh, did I make the right choice?" But it's been the right choice for me. I mean, I had all the things that I've needed to do handled with the with the equity that was in my home, and been able to upgrade everything in my home, especially now in Nevada with all the, urgency to redo your landscaping, take out the grass and convert it to, more desert. I mean, that's costly. Yes, you do get rebates, but it might not cover the entire project. And so the equity in a reverse mortgage is a godsend. And so the only thing you have to pay is your insurance and your taxes. That's it. And you still, you still have insurance if, God forbid, there's an accident that, you need to replace something in your home.
Right.
So it's a good move if you're looking to change. It's a refi. You know what I
Yeah.
mean? You can refi with a conventional mortgage, or you can refi with a reverse mortgage. So
And either one,
that's
there
and
there potentially could be solutions, or could be a solution to help with, some things we're talking about, making sure you have adequate coverage, right? I don't know how you feel, but if someone has access to some housing wealth, however they extract that, whether it be a conventional mortgage or reverse mortgage, and they're sitting on it, yet like we hear the expression, I'm house rich but cash poor, and on top of that, I may not have adequate coverage for my, maybe not so much my home, but for myself, my estate, my family, etc. And I'm living on fixed income, which I get it. A lot of
right.
people, I don't have the income, so I'm not sure how. I'd like to maybe, like you said a minute ago, what's the solution here, Dena? Get coverage. Make sure you're covered. Make sure you have adequate coverage for your situation, right? I'm just wondering how, this could be more of, how this could be, this awareness could be raised more for homeowners who have housing wealth, that, you might have some other solutions that you're not looking at to get you the type of coverage and making sure yourself, your loved ones are adequately protected.
So let's say you have housing wealth, but like you said, but you don't have cash flow. So then it's going to be harder to pay the other things that you have to pay. Your insurance, for instance, and other things that you need without that cash flow. So a reverse mortgage is one solution. You've got a lot of equity in that refi, and you can use that to pay your insurance. You can use that to pay off the bills that you've been accumulating that are keeping you cash poor. So, I think it's a good solution. And then you can afford the coverage that you need on your insurance,
Right.
because you have the cash flow now. Whereas before you had to penny pinch, and you want to think to yourself, okay, is it worth it to me not to have this particular part of the coverage that I need in case of a risk,
Yeah. Like flood
because I
insurance.
can't afford it?
Right.
Or is that really not the way to go, because it might ultimately, in the end, cost you more for not affording it
Right.
when something happens?
Yeah.
That's what insurance is for.
Yeah.
It's for peace of mind. It's for what if.
Right.
And hopefully you never have to use it. Yeah, and then you feel like, oh, well, I've been paying for nothing. Not, it's like Murphy's Law. What if?
Yeah.
Murphy's Law is if you don't have it, something's going to happen.
Right. Yeah. So true. Well, any other thoughts that you want to leave us with today? And also definitely want to make sure that people know how to best get a hold of you. Just anything we didn't cover today that you'd like to cover before we wrap up?
Well, I think we've covered most everything.
Yeah, good.
But I would like to introduce myself. My name is Dena Cole, as Rick has introduced me. And I can be reached at 702-302-1648 for all your insurance needs. Or go to Gleish Insurance Group.com. GLEISH insurancegroup.com.
Dena, thank you. Thank you for coming on today, sharing your valuable services, information. Can't stress enough the importance of making sure that, you're protected and you're covered. If you have any questions for Dena Cole, you can reach out to her directly, as she just gave you her contact information, or you can send us a message as well. And as always, if you have any questions regarding retirement mortgages, reach out to me directly. Thank you again, Dena. Thank you for tuning in, and watch out for upcoming episodes on Retirement with Rick.